Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, welcome back to Kaiser Watch.
Jim, pleasure to be back on the show.
John, Verde Agritech has recovered from its slump. Is the alternative potash story back on track?
Jim, indeed, it is back on track. On August 31st, the company had announced that Plant 2's Stage 1 capacity of about 1.2 million tons per annum of K-Fort output had been commissioned, and it was ramping up to full capacity, which should allow it to deliver product during the remaining sort of September-October delivery window for application to the farms in Brazil. Now, in May, it had revised its 22 output guidance upwards to 1 million tons, which it expected to generate Canadian $109 million in revenue with $49 million in EBITDA cash flow. But less than 2 weeks later, Verde Agritech hit the market with setback news. Although the rainy season doesn't start until November, on September 9th, the company announced that groundwater problems with its Plant 2 access road had forced it to suspend K-Fort shipments for 4 to 8 weeks while they fixed the problems. Now, this forced the company to revert back to its 2022 production guidance, which was 700,000 tons per annum output, and that had come out in January, when it wasn't really clear that Plant 2 would be fully operational in time for the primary planting window for the Brazilian farmers. Now, those projected revenues of $87 million and EBITDA of $31 million, which is still a very impressive improvement over the past year. And especially given that the company expects ultimately to replace 50% of Brazil's potash requirement with the alternative potash, K-Forte, which is a natural rock called glauconite. It has about 160 potassium content of conventional potassium chloride and has a considerably less harmful impact on the Brazilian soil. Now, when we talk about the upside growth potential of the story, and we're talking like 2030, in May they had done an updated pre-feasibility study which modeled what it would look like if 50 million tons of K-Forte were produced annually. And but the market didn't really care about that, because the milestone it's concerned about now is getting to this 2.4 million ton per annum Plant 2 capacity. And the challenge for the company is to demonstrate that the farmers are continuing to embrace this alternative potash for their crops. And so this year has been a good year in that regard. It started to accelerate last year, before the Russian invasion of Ukraine really created a panic about the reliability of potash supply from Belarus and Russia itself. But the market had a very negative reaction to this development, because it appears that management was blindsided. At the end of August, there's all gung-ho saying everything's working, then all of a sudden 2 weeks later, we have problems with the road. And so the market's been a bit spooked by, what other gotchas are lurking in the wings that could ambush this company? Now, the company said it would take 4 to 8 weeks to do, and to fix this problem, which meant, of course, the plant couldn't really produce and ship very much product during this period. On October 19th, they announced that the road improvement, the construction of a new bridge, 14 kilometers of asphalt, all of this had been done. The road was working. The rainy season doesn't start until November, so it remains to be seen that there are no problems, but management is completely on top of that. Now, on October 26th, they announced that they had achieved 1.2 million ton per annum nameplate capacity, which is what the equipment is designed to operate. But it does not mean that the plant is now operating at this level. One of the benefits of having to suspend production beyond testing to make sure it's working is that they can now finish installing the other 1.2 million tons per annum of K Forte capacity. They are still shipping product. They announced that they had to suspend or defer deliveries because the product was sold out, the 600,000 ton per annum plant one. Of course, I've been cranking all full tilt, and they've delivered all that. But they're now in a bit of an idle period, preparing for Q1 of 2023. Now, the primary planting season runs from March through September, but there's always different times, farms doing different plants, different crops, different times. So they are still delivering product, but not at a huge scale. So the guidance for the reverted guidance for 2022, it will remain the same of 700,000 tons, but they're also pretty confident that for 2023, the guidance of 2 million tons, they will be able to achieve that. And Q1 will be an important milestone because everybody will be gearing up for the planting season. It'll also be an interesting period because with regard to all the sanctions imposed on Russia, potash was pretty much excluded. So potash has continued to ship from Russia, and also Belarusian potash is coming via Russia. It's getting to the port in Brazil. The price is no longer $1,000 a ton. It's now somewhere around $600 a ton. That's above $500 a ton and well above the sort of $368 per ton price that Verde Agritech uses to base its revenue and profit projections on. Now, interestingly, in that press release where they talked about the being sold out and everything working, they also mentioned that they are using the plant 2 facility to play with additional technologies such as thermal potash, the Cambridge technology. And the Cambridge process was developed in 2010 to 2012 with the assistance of Derek Frey at Cambridge University to see if they could convert the glauconite into conventional potassium chloride. And that's what that big charge to $10, $12 was all about during that period, because the technology worked, the process worked, but at the time they needed $400 a ton, and potash prices were above that in the beginning, but subsequently they sank through that. When the feasibility study was published, it failed to be bankable because the pilot plant studies required to achieve the bankability of the equipment at the scale required. Well, they weren't large enough. They were going to cost $10, $20 million more. And that was the end of the story because potash prices continued to sink, eventually stabilizing just over somewhere between $200 and $250 per ton. But that work was not all a waste because some of it generated information about how mechanically manipulating the glauconite material can change the release schedule. So they are now using this bit of an idle time to also experiment with creating different forms of K Forte for different release schedules. And with regard to Plant 1, which is now available for all their other technologies such as Micro S and BioRevolution. BioRevolution is the loading of the grains with microbes for helping reclaim depleted or deficient soils. And of course, the Micro S is adding nutrients, micronutrients such as sulfur to the material, also on a custom basis. So that plant is now able to focus completely on the specialized applications. And the future for Verde Agritech is not just all about achieving 50 million tons per annum of K Forte. That's a pretty substantial target in its own right. And my prediction based on about 54 million shares fully diluted that this stock will eventually support $50 to $100 a share. That is pretty much linked to being able to persuade the Brazilian farmers that yes, K Forte is a valid alternative to the conventional potassium chloride. It's less damaging to the soil. But the other potential upside resides with all these information technology related applications they're developing, where they're able to take this basic glauconite material and use its microstructure to load it with additional supplements such as microbes or these nutrients, and customize the product for a farmer's particular field. So this is this big open area that the company is also progressing for, and the slump is over. They fixed the road. They know the plant is now working at capacity. They're gearing up for the big production season starting in Q1 of next year, ahead of the big planting season. And as far as the NASDAQ application is concerned, they are going to shoot for getting listed in early January for some sort of technical filing reasons. So it hasn't happened because of these technical reasons, but they're still pretty optimistic that this company will be available for trading on NASDAQ sometime in January. And the wild card is we've got an ugly winter coming in Europe with the Russian gas supply not available, with Putin threatening to detonate a dirty bomb, or maybe even an official tactical nuclear weapon, and blame Ukraine for the dirty bomb. All of this could set the stage for a ramped up NATO response to Russia, and I think the supply of potash from Belarus and Russia would end up probably physically disrupted in this situation. Now, Crystal also tells me that in Brazil, they're not worried about that at all. They're focused on their own upcoming elections, which are the runoff between Lula and Bolsonaro is on Sunday, October 30th. The business community seems to be siding with Bolsonaro winning. Remains to be seen who actually wins, what sort of political fallout will be. But the farmers are not thinking at all about a potential physical disruption in the first quarter of next year as they prepare for the planting season. And in this regard, concerns that the market may have about, well, okay, they got the farmers to adopt 600,000, 700,000 tons of this K4 alternative, but can they get it up to 2.4 million? Well, I would guarantee that if this Russia-Ukraine situation escalates into a major hot conflict involving United States and NATO, there will be a significant shortage, and they will sell out in a heartbeat. Now, they're not counting on that. They're expecting to sell out anyways, to get up to 2 million tons per year output. So the story is back on track. This disruption with the road, this problem has been solved. They'll be able to monitor it during the rainy season to make sure there aren't any other problems, because they're not going to be shipping huge amounts of product during this period. It's not such a big deal if there are further problems. So everything is on track for what's going to be a very promising 2023.
FPX Nickel hit a 2-year low last week. Is there something wrong with the Decar story?
There is absolutely nothing wrong with the Decar nickel story, but the market has been damaged by a persistent seller through RBC who may finally have finished on Monday. Now, back in April 2021, FPX Nickel did a bought deal, $16 million of it, and a sizable part of it was taken down by a couple of micro funds managed by the Salt Lake City-based Wasatch Global Group, and they manage over $40 billion in funds to a whole variety of different mutual funds. But in December of last year, one of the underwriters, Cormark, became a very persistent, heavy-handed seller. Until early January, 1.9 million shares were traded at cost at 50 cents, and that seemed to be the end of it. And Cormark has been absent from the market. And FPX Nickel was able to confirm that one of the Wasatch funds was no longer a shareholder of FPX Nickel, because they do have to file their quarterly holdings. And as of June 30th, they saw that there was only one of the micro-cap funds still holding FPX Nickel, apparently somewhere between 1.6 and 1.7 million shares. But during this summer, starting in September in particular, RBC showed up as more of a net seller. And the FPX Nickel doesn't know that this is the Wasatch Fund doing the selling. Nobody there has ever contacted him to say, we need to lose 1.5 million shares. You want to find a home for it. No, they have just been sort of hitting the market in these sort of 20, 50,000 share sales. They stepped up with a couple 100,000 share days at the end of September, and then they stepped up again in the middle of October, and the climax was on Friday when about 767,000 shares were dumped, taking the stock to 34.5 cents. And this, of course, is making poor CEO Martin Terrain lose his hair, because we are in a very bad market in general. Shareholders are suspicious that whenever there's a big seller in something, there's something wrong with the company, and they begin to worry that what does the seller know that I don't know? And when management isn't sure what the identity is of the seller and why they are selling, which could have absolutely nothing whatsoever to do about the fundamentals, that's a troublesome period for the market. And potential buyers who like the story, they sit in the background and say, well, how low can this go? How big is this requirement to sell? And if they're not signaling to management how much they need to get rid of so that management can find some buyers to finally end the selling, the stock can sink lower and lower and eventually cascade other shareholders into giving up. But it seems that on Monday there was another 127,000 or so shares sold by RBC, but RBC seems to be gone. FPX Nickel won't, of course, know until sometime in Q1 of next year when the December 31st year-end positions for the Wasatch funds are reported. If both funds are no longer holded, then we know what the nature of the problem is. But I think it is very likely that these two funds are now gone. The shares are held by a broader range of shareholders. There probably isn't a significant institutional base in this company right now. They'll need to rebuild that heading into the new year. The company will have $5 million left at the end of the year, so they are not vulnerable to being squeezed by Bay Street or House Street to do a financing and bought deal at a big discount to the market. And in fact, by the end of the year, they will have delivered several milestones. One of them is the rest of the van drill results from this year. This will allow us to sort of do a ballpark tonnage footprint grade estimate. The drilling density isn't sufficient to allow a resource estimate to be calculated. Martin Terrain figures it probably needs another 5,000 meters of drilling to allow a resource estimate, but it'll give us some sense of the sort of grade and tonnage available in this additional deposit. At this stage, I don't think it's important because Baptiste is the primary development focus. The really important, they will have an updated estimate for Baptiste by the end of the year, and I think this may now include cobalt grades. But the really important milestone is the pilot plant study. They have undertaken with about 15, 17 tons of core material. This is supposed to result in 16 to 18 kilograms of ferro-nickel concentrate grading about 65% nickel. The market and also the end users and potential buyers of the company, they want to see the flow sheet used in the PEA validated. And if they deliver the 16, 18 kilograms of ferro-nickel concentrate, they will use that in the first quarter of next year to do bench-scale hydrometallurgical studies to make battery-grade nickel sulfate as outlined in the recent scoping study they produced. And they should also be able to determine if they can make copper sulfate out of this. Now, the cobalt sulfate. The cobalt is not payable if the ferro-nickel concentrate is used as feedstock to make stainless steel. but it may be payable if they can make the nickel sulfate for the battery grade market. So getting this 16 to 18 kilograms from the pilot plant study, this is an important milestone, and all the body language suggests that there are no terrible surprises in the wings in that regard. Now, with regard to the PEA, one of the big concerns everybody has is cost escalation, thanks to the inflation from the last couple of years. And the PEA used $7.75 a pound nickel as the base case price, and that generated, based on the current 235 million or so shares fully diluted, that generated a price range of $5 at a discount, 10% discount rate, to $14 at 5%. And what I have done is rerun this model, escalating both CapEx and OpEx by 20%, and that drops the output at the 775 base case price to a $2 to $10 per share range. Depends on what the discount rate you're going to use. Obviously, 10% is a bit tough, and 5% is not going to be used for a base metal project. So that might suggest maybe a future target in the $5 to $8 price range. But nickel right now is just under $10 a pound, and when I run it at that price, I get a price range of $8.66 to $21.65 per share. And a big question, of course, is what is the future price of nickel going to be? What is the future price of copper going to be? We really don't know, because the current market prices are premised on an expectation of a significant recession coming from these high interest rates that are being jacked up to subdue inflation. And of course, none of this is encouraging projects to be pushed into the development pipeline. So if the world does survive a recession, comes out of it, we will end up with a period of significantly stronger metal prices that aren't just higher because of generalized inflation, because inflation will have been subdued as a result of creating a serious recession. So I would say FPX Nickel probably has bottomed here in this sort of 35 to 45 cent range. The persistent seller seems to be gone. The fundamentals are all on track, and it continues to be a KRO favorite with excellent speculative value.
Endurance Gold did something unusual last week, namely announcing a financing at a premium to the market. How is that possible in the current market climate?
Jim, that should not be possible in this market. Now, Endurance does have the benefit of having a billionaire as a shareholder who owns about 25%, and another very rich individual owns about 24%. So they have some very deep-pocketed shareholders. However, their stake is so high that they can't easily just add more money and buy more without triggering certain security laws that involve takeovers and so on. So if the company is going to raise money, it's going to have to raise it from other parties. Now, traditionally, they go to the brokerage sector, but the brokerage sector right now, its clients are all running scared. And if they're going to do a financing, it's going to be at a deep discount to the market price. And as they learned with Line 1, even that's not good enough, because after you bash the stock down to do a bought deal at a major discount to where the stock seems to have achieved equilibrium, well, then it goes even lower below the bought deal price. So even that doesn't look like a really good scenario. So when on Friday, October 21st, the stock was trading 36, 37 cents, which is sort of, unchanged for much of the year. But they announced a $1.5 million financing, 3,580,000 units at 42 cents with a 2-year half warrant at 55 cents. The warrant's at a pretty good premium, and it's a half warrant, and it's not a 5-year full warrant such as predators who have not a particularly high opinion of a company insist on when times are tough. So we saw a round of that 6 years ago. Almost none of those warrants ended up worth anything. So seeing this unfold here, it's a sign that there's some serious people, probably family office types, already on board below 10%, so they can afford to to buy more without becoming visible, and potential other high net worth investors who are seeing what's happening and saying, I need to have a piece of this. The company, despite making significant progress this year with its drilling, which confirmed that the South Feeder Zone is indeed, the Reliance system does indeed have a vertical component to it, the recognition of these quartz veins that track the trend of the corridor, themselves barren, but their flanks seem to have become sticky for gold mineralization. The architecture of this system is gradually coming into view, and they have on October 3rd was the last time they reported results, so we're probably due for another round of results. At that time, they had drilled 33 holes for just over 7,000 meters of an 8,000 meter program. They had reported 16, so there were 17 left. There's probably 3 or 4 more holes completed this month. So there are 20 holes still coming. The company stopped giving any sort of visual guidance as to what the subsequent holes were all about. So we are in the dark. Earlier this year, we could tell from the way they changed the orientation and location of holes that they were coming up with interesting results in the core that they weren't necessarily telling us about. But with the drill pattern, the drill plan that they published, it's impossible to tell what is going on. But it is clear that they will, when these results are all in, they will have a very good understanding of what's going on with this Eagle and Eagle South Feeder Zone. And who knows, maybe there's even going to be another blockbuster intersection such as we saw last year in November at the Metals Investor Forum where Robert Boyd was present with Endurance Gold. He had some wonderful core there, and it was hard for him to keep from smiling because he's a very serious guy when it comes to this. And hole 20 ended up having excellent results. The visuals supported or the assay supported the visuals, and it opened up the scenario for the vertical mineralized structure that has now helped this company or project go from beyond being this sort of shallow dipping 35-degree dipping zones of 10, 15 meters thick that daylight to the northeast and get cut off by a fault to the west. Now we have a vertically mineralized system. And I think this financing, it's not really required. They still have money in the bank. But Robert Boyd is a conservative type of person who likes to have money in the bank ahead of results. They can continue work in January. This can be a year-round program. And any suggestion that this thing is losing momentum was put to rest this week. They announced an exploration agreement, a so-called exploration protection agreement with the Bridge River Indian Band, who got 130,000 shares for their sitting down with them and agreeing that, we'll support what you're doing. We'll provide workers to help solve any archaeological study requirements of environmentally sensitive habitats. And by the way, it's interesting that it's called the Bridge River Indian Band. Apparently they did not get the memo that Indian's now a bad word, that they should be called the Bridge River Indigenous Band. They're not even supposed to be called First Nations anymore, but I don't think they care. I think they like what Endurance is doing, and they're now working with the company, expecting these jobs related to their own heritage and traditional territories, but also looking at this thing moving forward and becoming a source of jobs down the road. And then the other news was that a day later, they announced that they had optioned 100% of the Sanchez claims for easy terms of, 300,000 shares and $10,000 by 2025, no royalty. These are joined to the east of the Olympic claims, which earlier this year they had optioned from Avino and which was, finalized or formalized a couple of weeks ago. So this is evidence that they're starting to think that this whole sort of northeastern flank of the Bendor Pluton, which is believed to be the primary engine for all these orogenic gold systems that created Braylorn and the mineralization they're seeing in the Royal Treasure Shear. Well, they think that this repeats itself around the entire flanks of the Bendor Pluton. So they're positioning themselves for turning this into a major gold district. So, if there are people paying attention, watching all this, and they have deep pockets, and they see the stock hasn't really responded to all the positive developments this year. It's still in that 35 to 40 range where it started. Well, it makes sense that they're stepping up, not afraid to pay a bit of a premium, and they're beefing up their position. So very unusual, and I would say a very bullish sign for Endurance Gold.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.